Here are Warren Buffett's top 15 investment advice from Berkshire Hathaway's shareholder letter. Long-term thinking. Our favorite holding period is forever. Quality over quantity. It's far better to buy a wonderful company at a fair price than a fair company at a wonderful price. Understand your investments. Risk comes from not knowing what you're doing. Invest in businesses, not tickers. When we own portions of outstanding businesses with outstanding managements, our favorite holding period is forever. Patience pays off. The stock market is designed to transfer money from the active to the patient. Stick to your circle of competence. You don't have to be an expert on every company, or even many. You only have to be able to evaluate companies within your circle of competence. Beware of debt. Borrowers then learn that credit is like oxygen. When either is abundant, its presence goes unnoticed. When either is missing, that's all that is noticed. Diversification can be overrated. Wide diversification is only required when investors do not understand what they are doing. Be fearful when others are greedy, and greedy when others are fearful. We simply attempt to be fearful when others are greedy, and to be greedy only when others are fearful. Focus on intrinsic value. Price is what you pay. Value is what you get. Ignore market fluctuations. The market, like the Lord, helps those who help themselves. But unlike the Lord, the market does not forgive those who know not what they do. Don't time the market. We continue to make more money when snoring than when active. Stay rational. The most common cause of low prices is pessimism, sometimes pervasive, sometimes specific to a company or industry. Stay within your means. Rule number 1, never lose money. Rule number 2, never forget rule number 1. Stay humble and keep learning. In the business world, the rearview mirror is always clearer than the windshield. These timeless principles reflect Buffett's wisdom and philosophy, guiding investors to make sound decisions and navigate the complexities of the market with prudence and confidence.